Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. Now, here, after 350 episodes, I've analyzed all of the episodes to try to break them down into the most common mistakes. And I'm just going to go through them right now. The number 1 out of 6 most common mistake is failed to do their own research. Number 2, failed to properly assess and manage risk. The third most common is driven by emotion or flawed thinking. The fourth is misplaced trust. The fifth is failed to monitor their investment. And the sixth is a catch-all account invested in a startup company. Those are the 6 most common mistakes.
Welcome to the Get Invested podcast, where we share great conversations with experts from all walks of life to uncover their secret know-how and where they invest their time, their skills and their money, and the benefits that this has created. You see, the truth is that everyone invests. Every minute of every day, we're investing our time, our skills, our energy and our money in something. Some of us are investing consciously, some unconsciously, sometimes for good, sometimes for bad, and sometimes for no impact. Get Invested will help you to start living by design, not by default. I'm going to help you to make it happen, not let it happen. You'll hear the top tips on how you can live with conscious intent so that you can live more, work less, and leave a living legacy by investing now. Listen to the show to discover the top tips on how to get started, make the most of your investment journey, and ultimately to be living your dream, not someone else's. More episodes can be found on iTunes or at bushymartin.com.au/get invested. Thanks for listening, and now let's get invested. Hi, freedom fighters. What's been your worst investment ever? How often do you lose money when you invest? On your shares, on your property, on your crypto, or any other latest instant money-making craze that grabs our attention? Now, we all have coulda, shoulda, woulda stories about lost money in investing. You know, that red-hot share tip from the Uber driver that you never saw coming. Or your brother-in-law's stupid business venture that you lost a bundle on. Or that now valuable collectible that you tossed out years ago. Or how about that time that you got caught with a timeshare where you were conned into buying something when you're on holiday that's still taking money out of your wallet every year? Or maybe your long-forgotten venture into some multi-level marketing company that was going to make you millions at the expense of your family and friends. Or the shares that you bought in that new butte company that was going to the moon, but plummeted overnight and are now worth next to nothing. But you're still holding on to them, hoping that one day you'll get your money back if you just hang in there long enough. Or the most recent exercise where loads of people sold their shares when prices tumbled following the announcement of the global pandemic and the resulting lockdowns, only to see the same shares go up in value substantially since then. You see, the options to lose money are endless. And while some financial faux pas are very easily shrugged off, others just can't be forgotten quickly because the dollar amounts end with way too many zeros. So what's the worst investment or financial decision that you've ever made? Chances are that you've made them, but you don't want to admit it. You don't want to talk about it, or you don't want to know about it. We just conveniently ignore it or forget it, hoping it will all go away as we sweep our past mistakes under the carpet. Or worse still, we blame something else or someone else for our investment performance. Or, yet even worse again, we don't invest at all because we're too scared that we're going to lose money. But what if our worst investments create the seeds of our biggest learnings and our biggest opportunities? Only if we're prepared to look and reflect serious on them though. Because here's the rub. Over the decades that I've personally been investing and researching the most sustainably successful investors, there's one consistent theme amongst them all. They all make lots of mistakes, and even more importantly, they learn the most from their mistakes. So let me ask you again, what has been your worst investment ever? I want you to really reflect on this, because your worst investments to date will hold the keys to your best investments if you take the time to really reflect on them and to learn what you will do differently next time. It's the only pathway to improvement, as well as sustainable success in anything. You need to act, reflect, revise, and repeat. Just make sure that you see bad investments as stepping stones, and don't let one poor investment stop you from continuing. To get started on thinking about your worst investments ever, reflect again on the 6 most common mistakes that investors make that today's very special guest mentioned in the opening extract from our engaging conversation. To make it easier for you, let me restate them, because chances are the mistakes you've made in your past worst investments will be captured by one or more of the following. Firstly, you failed to do your own research. Secondly, you failed to properly assess and manage your risk. Thirdly, you were driven by emotion or flawed thinking. Fourthly, you misplaced your trust. Number 5, you failed to monitor your investment. Or finally, number 6, you invested in a startup company or a brand new, unproven financial instrument. Now, are any of these ringing any bells? More importantly, though, what can you do about it? And what can you do to avoid these common money-losing mistakes in the future? Well, that's where my great conversation with today's awesome guest, Dr. Andrew Stotz, comes to your rescue. Because he reveals the 6 strategies that you can adopt to overcome these common money-losing mistakes. And Andrew is extremely well qualified to identify and help you overcome investment mistakes and to assist you to become a successful investor. Andrew is the author of multiple finance and investment books, a recognised finance expert, an angel investor, and a self-professed happy guy. He's an award-winning financial analyst with more than 2 decades of experience in leading positions in the industry and as a university lecturer of finance. Andrew is driven by empowering and helping you to achieve your goals through sharing his financial expertise. No matter if you're a student, someone who wants to take control of your own finances, a fund manager for a global institution, or a Fortune 500 CEO. He's also a hands-on business owner and as co-founder of Coffee Works, a leading specialty coffee roaster in Thailand that has been trading now for nearly 3 decades. In 2013, Andrew retired from a 20-year career as an equity analyst at various investment banks in Thailand to set up his own company. His last senior corporate role was as portfolio strategist and managing director of the international business department at Maybank Kim Eng Securities in Thailand. As the founder and current CEO of A. Stotz Investment Research, or ASIR, his company provides institutional and high net worth investors with ready-to-invest stock portfolios that aim to beat the benchmark through superior stock selection. ASIR also provides institutional investors and fund managers with financial services such as valuation, stock selection, and portfolio creation, particularly in Asian markets, based on his proprietary FVMR methodology. This unique methodology aims to not only favour one style, such as value or growth, but instead considers the 4 elements of fundamentals, valuation, momentum, and risk, or FVMR. In addition, Andrew was the former president of the Chartered Financial Analysts, or CFA Society of Thailand, and he's a renowned public speaker on topics such as investing, valuation, and management related to the famous Dr. Deming's quality teachings. Over the last few years, Andrew and ASIR have made much of their research free and publicly available through their great initiative, Become a Better Investor. Andrew also offers his highly respected valuation masterclass, with an aim to help people build great careers in finance, with more than 1,000 students from over 30 countries currently completing it. He's a recognised public speaker and commentator on matters of investing in Thailand and Asia in general, and is often cited and quoted by Bloomberg, US News, The Star, and many other regional and global news outlets. Andrew is also a multiple award-winning author of a number of books, including How to Start Building Your Wealth Investing in the Stock Market, Transform Your Business with Dr. Deming's 14 Points, 9 Valuation Mistakes and How to Avoid Them, and My Worst Investment Ever, which echoes the title of his very popular and highly respected podcast of the same name. And what I really respect about Andrew is that his incredible personal and professional success has been achieved despite his extremely challenging childhood beginnings, that has helped him to maintain his humility and genuine warm empathy and care for others. You'll be really moved and inspired by his life story. In a nutshell, his early beginnings have inspired Andrew's multi-pronged financial education approach that helps you to create, grow, measure, and protect your wealth. Now, breaking this down, it helps you to create via his Finance Made Ridiculously Simple online course. His team mentors management teams to make their companies financially world-class. He also helps you to grow via his How to Start Building Your Wealth Investing in the Stock Market online course. Here, his team creates ready-to-invest portfolios of ETFs and stocks, depending on your risk tolerance. He also helps you to measure via his Valuation Masterclass online course, where he helps companies to value their businesses and understand how to increase that value. And finally, he helps you to protect. As Andrew quotes from Otto von Bismarck, "Only a fool learns from his own mistakes. The wise man learns from the mistakes of others." In this regard, you can join him on his mission with the My Worst Investment Ever podcast to help others avoid investing mistakes, of which I was very honoured to join him as a guest. And I can say without hesitation that this was the most enjoyable, energising and engaging podcast interview that I've ever had. So please do yourself a favour and subscribe to this great podcast, where he shares stories of loss to keep you winning. Make sure you have a listen to discover the best practices for risk management that will keep you investing successfully. Now, in today's great conversation, Andrew not only shares his 6 key strategies to avoid the biggest investment mistakes, but he also unpacks lots of immediately usable investment gold and answers all of your other key investment questions that include the 2 proven ways to grow wealth, his unique FVMR and quantamental investment approach, how to create a cash machine, the 4 key things you need to consider before investing in a business, amongst lots of other investment gems. We also talk about the TLC challenge that we jointly created in the moment on his podcast. So make sure you have a listen out for this and email me at bushy@knowhowproperty.com.au with how you respond to the TLC challenge. And if you'd like to join Andrew in any of his online courses, just go to academy.astotz.com. That's ASTOTZ. That's academy.astotz.com, or click the link in the show notes. And if property is more to your liking and you'd like to optimise your performance in property investment, we're taking investors to new heights in our unique Freedom Flight program that gives you access to our Freedom Flight live interactive information sessions and unique portfolio planning process. To book your ticket or to find out some more, just go to knowhowproperty.com.au/Freedom Fighters or click the link in the show notes. In the meantime, enjoy this heartfelt and instructive yet inspiring conversation with Dr. Andrew Stotz.
Hi, Freedom Fighters. Now, a few weeks ago, I was very humbled to be a guest on the My Worst Investment Ever podcast. And I've got to say, it was the most enjoyable and energising conversation I've had the pleasure of participating in. And it was all because of the engaging warmth, the intellect, and the insight of its host, Dr. Andrew Stotz. And I enjoyed it so much that I couldn't resist the temptation to reverse the tables today and get Andrew to join us here on Get Invested, share his wealth of wisdom. So welcome, and let's get invested, Andrew.
Bushy, it's great to be here and also to share what I've learned and what I've experienced with your listeners.
Yeah, it's going to be a lot of fun, mate. You've got a wealth of wisdom to share and a really interesting, engaging story, mate. So, and as a perfect entree to that, I'd love you to start by sharing with us who you are, what you do, but most importantly, why you do what you do, Andrew.
Okay. Go back in time to when I was 14 years old. My father called the police on me. I smashed out the back window of the house. I was basically high on drugs and completely out of control. My parents had me arrested and put into juvenile detention. This was at the age of 14. By the age of 17, I had tried to kill myself a couple of times. I was involved in, using drugs quite a bit and alcohol. And I went into a treatment center in 1982. At that point, I came out of that treatment center, and within 4 days, I was high again and in serious trouble, and then just kind of ran away. And I was just turned 17. And somehow my parents got a hold of me and said, you've got to go to the next treatment center. And they had arranged it in Baton Rouge, Louisiana. My dad put me on a bus to go from Cleveland to Baton Rouge. And he said, just be careful. We've given you enough money to survive to get down there. And and they said, don't use any drugs along the way. Who knows what could happen in the different cities you're going through on this bus. And of course, I purchased drugs and alcohol the whole way down, spent everything I had. And my dad told me it was about 2 blocks to the hospital from the bus station in Baton Rouge, Louisiana, which was a very tough town. So I spent my last quarter playing a video game at the age of 17 here, and then I went to this hospital, and it turned out it was 22 blocks, not 2. And so there I was walking through this very, very tough city. And basically what they said is, my parents said, this is a one-way ticket. If you don't make it through the probation period and then get accepted into the treatment center, then you're on your own in Louisiana. And basically on my 6th day of the probation period, they said, we're not going to accept you into the treatment center. And that was the moment where I went back to my room in that locked ward and got down on my knees and realized that I'm not God. I didn't know anything about God. I didn't know anything about anything else. But what I knew at that moment, that everything I did, was just driving me into the ground. And that was a moment of surrender. And that was September 15th, 1982. And that began the journey of my sobriety. And now that's been many, many years that I've been, clean and sober. And so that is a foundational story of my life. And part of the reason why what I try to do is when I talk to people and share with people is I like to talk about the emotion of our lives and, what we're experiencing and help each other out.
I wouldn't mind just sort of digging in a little bit prior to that crossroads moment and understand, try and understand what led you down the substance abuse, the drugs and the alcohol path. I'm just always interested to find how that even came about. Can you share with us your thinking and what you're feeling that sort of ended up there?
I had a friend of mine, and whenever he drank milk, he got a rash on his arm. So he just stopped drinking milk. Turned out he was allergic to milk. I think after many years of thinking about it, I would say I'm allergic to alcohol and drugs. In fact, I'm just allergic to the high. However I get there is just the means to get to that point. And you could even argue that in my work and in my life, I'm still searching for the high in the things that I'm trying to accomplish and the things that I'm trying to, it's just that you could say it's more of a positive addiction. But I would say that was it because, my family was a good family. We were middle class and wasn't abused. I had the things that I needed in my life. So, I would just say that I just am one of those people who it just doesn't work. I'm one of those people, I'm the person that can sit at a party and see. I even say it to my mom, who lives with me here in Bangkok. Mom, you going to finish that glass of wine? Just the idea that she would leave it, with a little bit in there just doesn't make sense to me. So I just would say, there was a personality type. Maybe it's genetics. I don't know. But that's kind of my explanation of it.
Yeah, do you feel, this is from one addictive personality potentially to another, I guess. Do you feel you have a sort of an addictive personality? You sort of touched on it there and said that, you might have diverted your attention to other areas, and that's probably more a healthy addiction perhaps than the other. Am I on the right track there?
Yes. Yeah, in fact, I met with a lady a while ago, and I asked her what she did, and she said she worked with students that had attention deficit disorder and hyperactive attention deficit disorder. And I said, so, how do you like that or whatever? She said, I just really feel sorry for these kids. They just can't really focus like a normal kid. And then, I was just sitting there and I was thinking, so wait a minute, what's normal here? You get 100 kids in a room, and they're all quiet listening to a boring teacher teaching a topic that they don't want to hear. And they're all quiet except for that one or two ADHD type of kids like me that's going, what, why, huh? And I think to myself, let's reframe this. I don't want to be, if normal is sitting there and just getting bored out of my skull, I don't want to be normal. That's the first thing that I realize is that, of course, we try to, label things. And so I don't accept that label, number one. And the second thing is that it's a damn superpower. The obsessive compulsive thing, if you channel it properly, and for those listeners out there who have something like attention deficit or hyperactive attention deficit disorder, which is probably a little bit more of a description of what I have, there is something that's really cool, and that's called hyperfocus. And basically, I have the ability to just dive into something for 4 hours. And, for the listeners out there, if you've ever dove into something for 4 hours and you come out and you go, my God, I just wrote, 3 chapters or whatever it was that I did. And so I learned that, I think the best lesson I've learned in life is that our objective in life is to be more of who we are, not to try to be someone else, do something else. And in each of us have weaknesses and each of us has strengths, and we've got to play to those. So to give you an example of how I've worked that, and I explained this to this young woman, I said, look, with this obsessive compulsive, if it's directed in the right area, you can accomplish a huge amount of stuff. But also, once I recognize it, then I hired and I work with people who are not the same as me. My business partner for 20 years in my research business, a Thai man, he is what I call steady Eddie. And I'm like shooting up, crashing down, but he's steady Eddie. And that's what I need in my life to handle, my ups and downs. And so I would just say that for those people listening out there that have been labeled and the label comes across as something bad, I don't accept it.
Yeah, 100% agree. We're very quick to label anything and everything that's normally critically labelled. The positive side doesn't get anywhere near as much attention. But I agree with you. Someone who's able to immerse themselves totally in something and again, suffer the same affliction, Andrew. I just I haven't heard the term hyper-focus, but I think that sums it up beautifully.
Yeah, the other thing that I would say is that I was just talking with a recent guest, and I'm publishing his episode in the next week or so, and he said he was listening to one of the podcast interviews that I was doing, and he heard me say something that he said it really stopped him in his tracks. And I think it's worth saying is that, I work really hard to protect my brain. My brain is the centerpiece, as is all of our brains. It is the source for us. If you lose the brain capacity, or it is distracted and diverted, you will never be able to get where you're going. And the point is that the whole world, whether it's labels like ADHD or ADD, whether it's advertisement, whatever it is, the world is trying to take my brain. And so I really see it as an opportunity to just really protect my brain. And so that's, something that I really believe in.
Yeah, I love that. Something that goes with that, and again, it's something that I've struggled with and be been challenged with, but I also see it in people who have gone down the substance abuse road. Is the concept of control. And there's I think a misconception often that we think we're in control when quite often we're kidding ourselves. What are your thoughts on your experience around that? Is that part of the challenge?
Yeah, I think that, when things are spinning out of control in our life, the natural tendency is to grab on tighter. And what I like to do is I have like a visualization. And basically that visualization is me with, let's say, a comfortable bed behind me, standing up, holding on to like some railing. And I'm holding on super, super tight. And then all of a sudden I realize I can let go. And I fall back into this very comfortable bed. And the point is that when you find yourself holding on super tight in life, it may be time to let go. And I think the COVID crisis and the lockdowns and all this stuff was a time where I literally, found myself on my knees saying, I can't, I'm scared. I've got businesses, I've got my mom, I've got my life. I don't want to see these things destroyed. But yet these powers are very, very strong. And so that was a time where I just really got knocked back, and I did just take comfort in letting go. And once I did that, it allowed me to come back stronger. And, my conclusion is I refuse to allow a disease, a virus, a bacteria, or any sickness, and also any government reaction to that sickness, to alter my life away from a great, happy life of success and fulfillment. I just refuse.
100% agree, and having the resilience to ignore that. I guess my wife and I stopped listening to the mainstream media 25 years ago, Andrew, for a reason that's full of fear and greed. About the 200 drivers that sort of seem to engage eyeballs and earbuds. So we just don't swim in that pool. And ignorance is bliss. I definitely dive into information that's relevant to my areas of interest, but beyond that, I don't need to know the rubbish that's often misreported anyway. So, just back on that, because sort of back at that point where you're on your knees and you've made that decision to say, right, that's it, I'm not doing this anymore. How challenging is it now? And how many did you say, 28 years ago or more that occurred?
Actually, it's close to 40 now.
40 years?
38 years.
38 years, okay, 82, yeah, my maths wasn't good on that.
Yep.
So how challenging is it then in day-to-day life where we live in a world of constant temptation for you can get anything, anywhere, anyhow, and at any time? Yep. How challenging has that been for you on the journey?
Well, I think the principles that I learned in those days, were, and as most people know nowadays, it's very common knowledge, is 12-step programs that are available out there. And those 12-step programs provide a blueprint or a framework of thinking and action. And of course, there's also meetings that you can go to, but that framework allows me, it gives me my structure of how I think about my life and the way I work. For instance, one of those 12 steps is saying something along the lines of, we admitted when we were wrong, and, we promptly admitted when we were wrong. And, it's one of the big important things is the idea that when we make a mistake, we immediately, basically, what I say 4 A's. The first is be aware of what's going on around you and what you're doing. The second is admit when you're wrong. Number 3 is apologize and say, and it doesn't take a lot. It's just, I am sorry, I was wrong. That's it. And then the final one is amend. And this is a hard one because sometimes when we do something wrong, we really do hurt someone. We cause damage. We may cause financial damage. And you may say to yourself, I don't have the money to be able to pay that. But the truth is that to truly be free of the baggage in our life, we have to amend. And that means that you may go to that person and say, I owe you $10,000 for this mistake, and I don't have it, but I can pay you $100 a month, and I will pay that every month until I can pay you more. And then you have done everything you can to clean up the wreckage of your past. And that allows you, this is what I learned 38 years ago. And so I live free of baggage. And anytime I accumulate baggage, I know the steps. Be aware, admit when you're wrong, apologize, and make amends. Simple.
Yeah, that's a great approach, because and you pick up on a very good point, because that all traces back to self-forgiveness. And if you haven't forgiven yourself, then it's going to keep kicking you in the backside all the way through until you've been able to come to terms with it, I imagine. I
think you're right. And then the point is that you can't just wish something away. Something that you have done wrong. As I give a lecture on ethics to thousands of young people around Asia in particular about finance. But I add on and I can teach you, how to get out of trouble. And basically what I say is that, majority of the trouble you'll ever face in your life will be caused by you. And if you learn the 4 A's, to be aware, to admit, to apologize, and to amend, you'll have solved most of the trouble that you will have created in your life. And the point is, I believe you can't get to true release and true freedom in this world until you've, really done those steps. And so there are some people that try to muscle through and say, I'm a better person now and all that. But if you haven't gone back and cleaned up the wreckage of your past, you just can't be as free as you could be. And that's my goal, is to be, and ultimately freedom of mind is the ultimate freedom, and freedom of your heart, of your emotion. It is the ultimate freedom. And I challenge the listeners out there that if you have something that's in your heart or in your mind that is holding you back, or is something that you've done wrong, consider going through those steps, and by doing that, you'll be released.
Yeah, very well said. I think it traces back to your level of self-belief. You can't believe in yourself truly until you've come to terms with, the issues that you've had in the past. And once you cleaned out that rubbish, as you so well term it, and then you have that level of self-belief that can then lead to confidence, which then can start to build on itself and achieve other world things in your life. And I guess that's a great segue really into, from that very challenging time at a very young age. Take us through where you have invested your time, energy and money since then, and what have you learned along that journey to get you to where you are today?
So once I left my third treatment center, I had been in 3 different treatment centers for almost a year, and I was free. And that day, it was my high school graduation, and I walked on the stage. Nobody even knew I was alive anymore. And I walked on the stage and got my diploma, and then I went out in the big world, and I never looked back. I just went forward. And I think that, what I thought was going to help me was just my passion, my excitement and all that. But really what I learned was I needed to learn. I needed to become educated. And I learned that through some hard knocks, where I thought I went to university. I didn't have any money, basically, so I managed to get a small grant from the state of Ohio where I was, and I went into university, and then I promptly quit after 1 term. Thought, I can do this on my own, and I went and did a sales job, and it was just awful, and it was painful, and then they ripped me off at the last minute when I was supposed to be paid, and I just thought, I really realized that education was my way out, and so that's where I started to go back to university and get serious, but I didn't have money to do it the way I would like to have. So I just had to kind of do it step by step. But I do want to point out one point, and that is during this time I had no money. My parents, basically my mom in particular, was quite strong, and she said, you got to move out when you turn 18. So I just gotten out of the rehab, and I was just back with my mom and dad. I think my dad would have liked me to be there, but mom was like, nope, you're ready. And so I had to move out. It was scary. It was painful. And I had nothing. And my parents said, if you ever get hungry, you can come home, but don't ask for money. And so I didn't have much money, but I did go to these 12-step meetings, and I was out with the friends that I made there. And what I can say is that I had no money, but man, I had a lot of fun and I was happy. And that was an important lesson in my life that I've carried all through my life, to realize part of my letting go when times are really tough is that I know that I could lose everything. And if I still have my friends and my family, I'm okay. And so that was a lesson that I carried, up until today. And it's part of what helps me to let go when I'm holding on. So I think that's a big aspect of my beginning. But then I would just say I followed a path of going to university. Eventually I went to Cal State Long Beach, studied finance, did an MBA while I was working at Pepsi in Los Angeles. And that was kind of the ending of my period in the US.
Why finance? What was the attraction?
I went into an economics class, and the professor said, there's 100 people in this room. I'm going to draw a line down the middle. 50 of you will be gone by the end of the term. And out of the 100, there was 200. He said, 100 of you will be gone. And out of the 100 that remain, I'll give 10 A's. And yeah, that man, I can't even remember his name. I can visualize that moment so clearly. But I said, damn, I'm going to be one of those 10. And it was just that man that really challenged me. And that's when I I got serious about studying, and it was economics, and I liked it. And then I started, I played around with accounting and other things, but, really finance is what got me most excited. And so that's how I ended up in finance. It wasn't like I wanted to have a career in Wall Street or something like that. I just really found it, fascinating.
Yeah, and for someone with an analytical brain like yours, the structure and the to some degree black and white, but not so around that would have been fairly attractive at the time. And then you throw that challenge on top of, there's only 10 that are going to get an A, and someone like yourself would be like, okay, I'm rising to the challenge. I'm going to show you. Was there a bit of that in there as well?
Yeah, definitely. And I think that's the point that I've learned in my life is that, you don't get that many chances to have turning points in your life. And when it comes, grab it. And that was one where, and I think the other lesson that I've learned is that people can change. I was a disaster before I got clean and all that. And then I wasn't that interested in school or anything like that. And all of a sudden I just found a new passion, and that was, education and what that brought me. And so if you're looking at your own situation, you're looking at your children's situation, and you're distressed a bit, stay positive, because things can change. People can change. It may take some pain and suffering to get there, but people can change.
And such encouraging words there, mate, because there are a lot of people in Australia. There's a nice ice addiction's gone crazy here in this country, mate. Everyone's making in their laundry tubs, basically. So it's sort of gone crazy, and there's a tendency to, as you said before, label people, and individuals carry that label, whether they're aware of it or not, but they aren't what they've done, is my read. Just because you've done something doesn't mean that that's it. You're like that forever. It's just a circumstance and a situation, and if someone has the will and the courage and the determination, then it's just a learning point on the curve to bigger and better things.
Well, I think that's one of the things about my mom that I always, respected. It was painful at the moment, but she saw something in me that I didn't see in myself, and I would say nobody else saw in me. I think I was probably be most likely to fail, in high school, let's say. But she saw that I had it in me, and she pushed me to go out there. And she didn't do it in a super strong way, and she didn't lecture me on it, but I just knew she saw something there. And so I think that, the lesson is for parents in particular that are dealing with kids that are having trouble with drugs and alcohol and all that type of stuff, is that stay positive. And the other thing is that, there are 12-step programs like, Alcoholics Anonymous, Narcotics Anonymous, and many other programs now. There's also Al-Anon for people who are family members. Go check them out. They're available right in your neighborhood.
Yeah. Okay, so into the economics, and obviously that ignited a flame. Tell us about where you went from there.
So then I was living in California, so I was very interested in Asia, and I took a trip to Japan and Thailand and Hong Kong in 1989. But what happened was Hong Kong was facing mass protests because of the Tiananmen Square crackdown that had happened. And so I stayed in Thailand for 2 weeks. And then, for anybody that could stay in Thailand for 2 weeks, at that time in 1989, when it was one of the fastest growing economies in the world, it was amazing. And I was just hooked. And so I went back to California, finished my MBA while I was working with Pepsi, worked for Pepsi for 3 years in manufacturing. And then I applied to teach finance in Thailand. And I got a job. And so in 1992, they said, yes, could you come next month? So I sold everything I owned. I packed up boxes of stuff. I got on a plane and I moved to Thailand. I closed all my bank accounts. I just left America. And I came to Thailand. I taught finance for a year. And then I entered into the stock market as an analyst. And so that was the beginning of my career. And I was 28 years old. And I think that's also a lesson that, it takes time. It takes time for us, all of us, to find. I think a lot of people see me now as an analyst and they think, man, you must have just walked right into this job and it's so perfect for you. But no, in fact, it took me to the age of 28 before I really got that job that I loved. And I've never let go of that job, the concept of being an analyst since then.
Yeah, what I love about what you're saying there also is that you don't have to, from first year high school, you don't need to know what your life journey looks like. My father always used to say, boys don't grow up until they're at least 30, so they've got no clue about where they're heading or what they're doing. So don't make any major life decisions before that, because you're only going to get yourself into trouble. So
people ask me what should I do? I'm not sure. And I'm like, how old are you? And if they say that they're under 30, I'm like, that's the whole point. You're going to be exploring so many things and you're going to find so many things you don't like. And, one of the lessons I've learned in life is that there's a lot more certainty in the things that we know than in the things that we don't know. And that sounds a little weird, but what I mean by that is that when you're in a situation and you don't like it, it's very clear. But that doesn't mean that you know what you like. It doesn't mean that you know where to go. But my challenge to people is when you find something that you don't like, quit, walk away. And to me, that's part of the key to happiness, is the ability and the willingness to walk away from the things. And many people just compromise and they stay in that situation because, well, how am I going to find a new job and what am I going to do and all that, There's a moment where you're swinging through life on vines like a monkey. And there's a moment where you just got to let go of the existing vine you have and you've got to search for that other one. And there's that period of time where it's scary as hell. But by letting go, it's going to free you up to find that next direction.
Very well said. Great analogy there. Okay, so into Thailand, and you talked about happiness earlier, having lived and worked in Thailand myself. The Thai people themselves, there's a lot of them that have very little, particularly when you get out into the country, and yet their happiness and gratitude for life is quite. I can see why you love that environment. It's a fantastic culture.
Definitely.
Yeah.
But also the priority of, money is number one in America. It's, it's a number one thing in some ways, but here relationships are more important, whether that's a family relationship or relationships at work. And I think back to when I was in the US and, if anybody at my work said, hey, let's all get together and go out for the weekend, hiking and camping, I would be like, what? Why would I spend any time with the people I work with like that? And here it's just a very common thing. And people are like, we're working together every day. We might as well just, enjoy each other. So the relationships is a huge part of why I like Thailand and why I continue to like Thailand.
Yeah. I think I've shared with you on your podcast, my wife and I actually eloped to Thailand to get married. And we just loved it. We were treated like kings and queens by the locals where we were staying. It was just we've got very, very fond memories of that time because of the relationship approach of the Thai people, pure and simple.
Yeah, man.
So moving forward from there, tell us about how the journey unfolded.
So basically, I took a job as an analyst in the stock market in September of 1993. The Thai stock market doubled by January of 1994. And then that was its peak. And now we're almost 30 years, years later, and the stock market hasn't come back to that point. And it's an important lesson that when we have bubbles, recovering from those can take decades. So, but anyways, I ended up very quickly being promoted to be the head of research at the #1 foreign broker in Thailand in 1995. And then, my ego, my lack of experience kind of got the worst of me. And I fired someone that I really shouldn't have fired. And just because they were threatening my world in some way. And then basically that person got reinstated. And then I said to my boss, well, then I'm going to quit. And so I walked out of the top job, that I loved so much because I was twisted up in my own ego. And I ended up going to a much lesser place to be a head of research, just like I was doing at the prior place. And then, meanwhile, in 1995, my best friend came to see me in Thailand, and he and I set up a company called Coffee Works, which is our coffee roasting factory that we have in Thailand. And we set that up in 1995. And then by this time, he was running that business and I was, managing my career. I was making great money, that's for sure. So all the money that I had, and he and I grew up in Ohio together, so we knew each other for a long time. So all the money that I had, I could, put to that business. And so I know part of the questions that you'll ask later is about how I invested. And I can say for my first 10 years of investing, really, it was about funding that startup. And basically in 1997, the Thai baht collapsed by 50% and the economy collapsed by 11%. And I lost my job, and our coffee business, basically all of our customers dried up and we were stuck. And so at that point, I was out of work and I had some money, but we had a factory. And basically we just went to our landlord. We said, we want you to reduce the rent by 50% or else we're going to move. And they said no. And so we moved into the factory and we lived in a room in the factory, out on the outskirts of Bangkok. And there's nothing going on in the factory. We have some workers, and we're doing some work, but, there's not a lot of customers and it's painful. And that was 1998. And then we had 2 beds in this room that was the accounting office. We moved out all the accounting stuff. And so it was like going back to university. And then I can remember in 1998, in August, it was a very rainy day. If you could imagine, a monsoon rains all day. It's a dark day. You could smell the smell of rain. And Dale and I were sitting on our beds talking, and my sister called. And we're already in the depths of depression, And my sister said that her cancer has come back, and she'd asked if I could come home quickly because they said she wouldn't live more than a month. She had 3 daughters, and my other sister has 2 daughters at the time. And so when I hung up that phone, Dale and I just looked at each other and just sobbed. And I lost my career. We were about to lose our business. And then now I'm about to lose my sister. And I got on the plane eventually, as quickly as I could. And I remember flying into Boston, and I just sobbed uncontrollably, knowing that this was the last time that I'm going to land in the U.S. to see her. I managed to spend 1 week with her, and then she passed away. And she taught me a lesson right at that last moment, because when I arrived, I got into the bed with her and was holding her, and we were talking, and I just sobbed and sobbed. And then she looked at me, and she's in very rough condition because of the cancer. She said, "That doesn't help me." And I realized that, I was thinking about how her death was impacting me. I wasn't really there for her. And she changed my thinking, and it changed the way I look at, when I experience death, that my objective in those situations is to think about that person. And so I switched my mind pretty quickly and tried to be involved with taking care of her for that last week. And, it was a great lesson. And so I came back to Thailand, and I was depressed. and I didn't have a job, and I didn't have the factory. It was no question whether there was definitely a question of whether we could survive. And so that was kind of my other bottom. If you could go back to when I was dealing with drugs and alcohol, that was one bottom. And that's why I highlighted the message that I learned when I got sober, which was, even if I had no money and no assets and nothing, I could be happy. And so I carried that message to that time when it appeared like all of my assets were being stripped from me and my family relationship with my sister. And so that really allowed me to kind of slowly come back. And then Dale, while I was gone in America, Dale said, we got to move out of the factory. We've got to get to an apartment or something that we just can't be caught up in this too much. We moved to that apartment. We stayed there for a year or two till we rebuilt. And then I got a job back into the industry in 1999 or 2000. And then, my life, then things started to really, get better.
Yeah, okay. We're in a very challenging time on multiple fronts, Andrew, and I'm sure a period where there's a lot of self-reflection that went along with that, but probably also prepared you better to handle the growth that then has since occurred in Thailand and across the world globally in relation to the financial markets that you're involved in. So talk to us a bit about how that folded out.
So, I think that it helped me to take a bigger perspective. I was no longer afraid of anything. If you're not afraid of death and you're not afraid of losing everything, what is there to be afraid of? Now, I'm not saying that I'm careless and I just go into situations fearless, but the point is that when I can strip away all the anxieties and all that, I can go back to the center and say, I'm okay. I'm going to be okay. And I think that helped me to be a better person, to contribute better to the people around me. And then it freed me from fear, and it allowed me to start to really build a good career in the world of finance. And I think that what eventually, I told my boss on day one in September of 1993, I wanted to be the number one analyst in Thailand. But, I've always taken a crooked road to where I went, and I say, in year one, definitely not. Year two, definitely not. Year 5, definitely not, because I was losing my job. 6, nope. 7, nope. 8, nope. 9, nope. 10, nope. 10, 11, 12, 13, 14. Boom. 14th year, I was voted number one analyst in Thailand. And that was a real pinnacle for me, and I really felt great about it that I had stayed. I lost focus in the sense that, I did a lot of other things, but eventually I got the goal that I set. And I think that was really a proud moment, but it wasn't my proudest moment in my career. My proudest moment in my career was when, as my career advanced, eventually I was involved with the Chartered Financial Analyst, CFA Society and CFA Institute globally. And I was involved as a board member, and then I was vice president, and then I was elected president by the members here in Thailand, which was basically Thai men and women in the financial industry, were willing to vote me to represent them in Thailand. And that was, I was in tears when I got that. And I gave my first speech about it, and just talking about how that's the real honor. And it shows that, I was able to assimilate here and all that. So that's kind of the trajectory of the way my career went. From an investment perspective, what I was doing was I was becoming an analyst. I was looking at companies. I've looked at thousands of companies in Thailand and outside of Thailand, and I built the skills to become a leading analyst. And those skills have to do with finance, accounting, but also strategy and management and market movements and momentum and many different factors that all come together to build the skills. And so I have an online course that I created called the Valuation Masterclass, where I bring all of those skills together into one course, which is very, very tough, what I call boot camp for valuation. But it is basically, it brings out all the skills. And I think what set me apart compared to other analysts was that I had the coffee business. First of all, I had worked at Pepsi in manufacturing, so I knew how factories work, and I knew all the problem spots. And then I had my own business here that we've now had for 25 years. But at that time, I knew all the challenges that CEOs were facing. So when I went to meet with CEOs or when I talked to fund managers that wanted to understand about Thailand, I knew things, I saw things differently than many other traditional analysts that just went to work as an analyst out of school.
Yeah, no, you've got your hands dirty walking the talk rather than sort of being an academic about it. You really understand the nitty-gritty of both sides of the fence, essentially. So, and you made an interesting point there, and it's something that I've been studying for decades now, and that is the road to sustainable success. And you mentioned 14 years. I'd sort of come to the conclusion it didn't matter where I look, whether it be business, whether it be in equities, whether it be in property, whether it be any endeavour, the journey to sustainable success, not the one-hit wonders or the overnight sensation sort of stuff, but the sustainable success, that exponential curve always takes around about 15 years, and most of the growth and most of the results come in the last 20% of that hockey stick. Yep. So your own experience is obviously a reflection of exactly that journey, and I guess my challenge to the listeners is to recognise that true sustainable success is a long-term endeavour. So focus on the long term, embrace the time that it's going to take, and then relax with it. So you're not beating yourself up because you haven't achieved fantastic things yesterday, but actually start to enjoy the journey, knowing that if you keep at it, then you'll as long as you're doing the right thing, and you'll still make mistakes along the way, you'll enjoy the fruit as a result of that. Is it
definitely? There's two good books. There's two good books on that: The Slight Edge by Jeff Olson, and then The Compound Effect by Darren Hardy. And those two books will help explain the whole concept. But yes, you got to build, and that's why I was saying, if I went back to when I was struggling as a young kid, I realized that education and knowledge was my ticket out. Yeah, maybe it's not everybody's ticket out, but if you really want to excel in an area, the truth is it's not that hard. People are not working so hard to improve themselves in any one particular area. Yes, there's a 10% of people that are working very hard, but the majority of other people aren't working that hard. So if you just dedicated yourself to reading, let's say, one book in your area of interest a month, you'd be miles ahead of majority of your competitors. And that's what I did. You'll see behind me, I have 500 books in my library right now. I've had thousands of them. I've read everything. I did a PhD in the area of finance, and I did my CFA. I also continue to teach, even though I stopped teaching full time. I've now taught for 30 years at university in finance. And that's what helps me also to, it helps me, obviously it helped me in the beginning to really understand and internalize the theories of finance, because I had to explain them. But more importantly, it really made me better able to explain complex concepts.
Yes. So there's no better way of refining your message than having to write a book. I know you've written several very good books, and I know when I sat down to do the same thing myself, if you look at me before and after the book, the way I communicate the message is so much better than it ever was before having to put the pen to paper and really craft that message. So, and you've honed that stone on quite a number of occasions, Andrew, which we'll touch on shortly. It's something I just would like to drill into just while we're there, because it revolves around the same subject. And, one of the things that I constantly get frustrated with in Australia is the instant everything response. So there is no long term. And, I was fortunate enough many years ago to read The Road Less Travelled that really rammed home to me the benefits of delayed gratification. But and it's something that stayed with me ever since, and as part of the armoury has really served me well as a consequence of that. But I find it very difficult to get people to actually understand the benefits of delayed gratification. But what's been your experience, and how would what's your thoughts on how best to communicate the benefits of embracing delayed gratification as a means to sustainable success, and whatever that might be?
Well, first thing is buy the book, The Road Less Traveled by Scott Peck, and read the chapter on delayed gratification. and read the argument of why this truly is the true way to have happiness in life. Once I read that, I challenged myself, and I think this is one way to get there, is to challenge yourself. And I'm gonna talk about it from a perspective of, let's say, your value or your wealth. Basically, there's two ways to build wealth. And I often say what I do in my business, I help people create, grow, measure, and protect their assets, their wealth, their value. And there's two ways that I see to create wealth. The first way is to start up a business. And let's just say you're one of the lucky ones, you start a business and you make a ton of money. That is the traditional way that we make money and that we build wealth or create wealth in our life. The second way, and this is something that, goes against what a lot of people talk about, and that is a job. If you have a job where you're earning, let's say, $100,000 a year, and let's say that you're spending $90,000, well, you got an extra $10,000 that you've created. You have literally created that. And once you start to understand it, I would highly recommend another book called Your Money or Your Life. And it's forgot the guy's name, Dominguez, I think it is, but we can get that. But the point is, what he really talked about was how, think of what you're doing every day as you're giving your energy. And so when you look at a TV, instead of saying that's going to cost me $50 or whatever, you're going to think that's going to cost me a certain amount of energy that I'm never going to get back. And when you start to do that, and then you post it on your wall, your monthly spending and your monthly income, that's what I did. I followed what was in that book. And it really made me realize that actually, if you're making $100,000 a year and you can get your costs down to $60,000, you've now created $40,000 of wealth. So, you do not have to start a business to create wealth. And then the next aspect is growing wealth. And that's the concept of, what are you doing with that money? Are you investing in property? Are you investing in the stock market? What are you doing? And a lot of people ask me, about my investments. And I say, well, actually, I have a little bit of a strange life because my business is very high risk. The coffee business is very high risk. We never expected we would get money from banks, and we didn't want to go to outside investors. So we wanted to self-fund. So I always had to have a lot of cash in hand to protect that business. So therefore, my other investments are much lower risk type of investments, diversified, all, that type of index type of thing. And people would think, I do sometimes play around with stocks, but generally I have to really balance the risks that I'm taking in entrepreneurship with, the other risks that I take in the market.
Yeah, very good commentary. And there's a misguided belief, I think, that having your own business is everything. And you and I both know that the number of businesses that are truly successful, few and far between, and those that do immerse themselves in them often end up in a worse position than they were when they were in a good job, because they're spending a lot more time, a lot more stress, and quite often eking out an existence that's relatively.
I think also I'll mention that your sound is coming across a little bit patchy. So, but what I will say is that, when I look at business and I look at job, like I've just described it, what your objective is to create a cash machine, an ATM, something that that just spins off cash. And whether that's a business or whether that's a job where you have, and as I say in one of my books, How to Start Building Your Wealth, Investing in the Stock Market, I say, take pride in living deeply below your means. And if you can do that, you've created a cash machine. And what are so many people doing? They're searching all around to try to find the answer. And they're buying cryptocurrency and they're doing all these different things. And they got it right in their hand and they're not taking it. So, it goes back to Benjamin Franklin's, quote, which was, "A penny saved is a penny earned." It's so true. And, most people just completely miss it. So if you want to create wealth, delay gratification and focus on either your business being a cash machine or your job being a cash machine.
Yeah, beautifully said. Let's jump into the current and the future a little bit, if you like. I'd love you to describe, and you may be living it right now, but your ideal lifestyle and what you've invested in and what you would continue to invest in to either achieve it or sustain it.
So I think that, from my perspective, the first thing is I have 3 businesses. So I have my coffee business, I have A. Stotz Investment Research, and I have A. Stotz Academy, where I put all of my courses and training and all that. So my first objective is to make sure that all 3 of these businesses are successful, profitable, and growing. And as I do that, and as I have done that, then that's my wealth creation machine. And that's my job, is to drive wealth out of that. And I also would give advice to any person that's in business or in small business. My challenge is you make sure you have monthly financial statements, balance sheet, income statement, cash flow. Work with an accountant to get that on a monthly basis. If you do not do that, you're never going to get there. But that monthly feedback is critical. And so the first thing is my core investments are that. Outside of that, I'll invest in a few different things. First is index funds. So there's a fund like in America, Vanguard has a ETF or a fund called VT fund, and it's notable because it owns about more than 8,000 stocks, which means it owns, technically, you could say, pretty much every stock in the world. It's the simplest, easiest way to invest. You just own that. You own equity exposure. You don't have to worry about, is the U.S. going to crash, or is Europe going to crash, or is this sector going to crash, or is this stock going to crash? So that's one aspect. The second aspect is I do own some property. I have done that. I've done rental and raw land. And then the other thing is individual stocks. And so sometimes I'll build that. And I always say, if you're going to build a portfolio of individual stocks, you want to have about 10 stocks in that portfolio. And less than that, and you really haven't really protected the risk through diversification. More than that, let's say you own 20 or something. First of all, it's hard to manage, and second of all, you're going to be behaving a lot like the index. So therefore, you might as well just own an ETF. So
there's a little bit of diversification in the sort of 10 or so stocks, but that's your risk money in a sense, because the rest of your portfolio is pretty much covered, and if you do well on those 10 stocks, bonus. If you don't, then it doesn't matter so much. Is that what you're thinking?
Yeah, I think that's good. And the truth is that there is some advantages to being a stock picker. You can keep your costs low because transaction costs are pretty low. And, you can hold a group of stocks that you really like and think are good. But, it takes some skill. It takes time. I mean, to do that, it takes a lot of time, which most people just don't have. So you don't want to go into that unless you've got the time to commit. I do have a recent work that I did on that, where I was in Philippines, and thought the problem in Philippines, I was advising about 2,000 kids, high school students. I was talking about buying an index fund. Well, they didn't really have an index fund there. So, I was thinking, how can I really provide advice? Well, I could go to them and say, well, buy 10 stocks, but how are these 2,000 kids do not necessarily, maybe 10 of them will really be a stock picker, and the rest of them, they're just going to get themselves in trouble. So I did an academic study where what I did is I randomly selected 10 stocks, and then I held those 10 stocks for a year, and then I randomly selected another 10 and reallocated to those 10. And I repeated that over years by backtesting this. And then I tried to kind of look at, there's many different outcomes. Some of those portfolios would have been really good, and some would have been really poor or bad. And then what I did is I basically said, well, if I combine a stop loss with that and say, okay, throughout the year, if this stock, any one of these stocks went down by 10, 15, 20%, I would just sell it, hold cash, and wait to the end of the year, and then reallocate. And I did that, and I found that it really enhanced the returns. And so what I would highlight, for most people, the hardest decision to make is what to do when a stock falls. So what I would say is, on a regular basis, whether that's quarterly or whether that's annually, imagine that the stocks that you're holding, you've just acquired. What's today's prices of those stocks? Set a limit of, I would say, maybe 20%, and say if the stock was 100, say if it went to 80, I'm just going to sell because I can't afford to ride that thing down, 50% or something. And then you just get out, you wait until you rebalance next time. But the point is, stop losses are valuable.
Very valuable, because I've always said that the more important question when you invest is knowing when you're going to get out, not when you're going to get in. Getting in is really easy, but knowing and having some process around the getting out is the challenging piece. And I spent some time many years ago when I was trying to get back on the fleet. I day traded for a couple of years, Andrew, and the stop losses were a saviour. And I had a system I had 60% losing trades, but the 40% winning trades, because I let the profits run, made that a profitable way to actually build a nest egg.
Yep.
So yeah, I think you're 100% right there. That's really good. So I'm picking that you're sort of more a fundamentals investor. Did you have a process or a hierarchy that you apply that gives you a greater sense of when you are stock picking, what is more likely to be a good trade than other?
Yeah, so basically what I'd done, I switched my behavior about 10 years ago. I went from being a traditional analyst, going deep into a particular company, and then coming up with a conviction, and then saying, I'm going to invest on this conviction. There's a place for that, but basically what I changed to is I developed a system that is, let's say, a factor-based system. I'm looking at different factors, and I summarize them into 4 factors, and I call it FVMR: fundamentals, valuation, momentum, and risk. And to me, those 4 factors, fundamentals, valuation, momentum, and risk, encapsulate pretty much everything I need to know about the market and about a stock. Every 3 months, myself and my team, we lock down and we calculate. Now, we've done a lot of back testing to ask the question, let's just take fundamentals. Well, there's many different measures. We could have return on equity. We could have net profit margin. We could have many. And you could imagine, let's say under fundamentals, let's say there's 10. Under valuation, there's 10. Under momentum, there's 10. And under risk, there's 10. So maybe we have 40 factors. What we do is we go back and back test and try to understand in the past which factors work the best for that market, particularly because we're looking across Asia. So different markets are very different. Australia is very different from behavior of the Philippines, from Thailand, from China. So once we've done that, we've identified a country model, basically. And then once every 3 months, we score all the companies in that market on that ranking. And then from that, we can rank companies from what we think are attractive to unattractive. Now, it could be that the factors don't work anymore in the future. It's possible. But the fact is that it's very hard to predict the future. I would rather have a much more secure, sound understanding of the present. And so by doing that, then we end up with, let's say, 20 companies that are most attractive based upon that factor model that we use. And then we do the fundamental research there. So it's what I call quantamental, a combination of quantitative to narrow it down and fundamentals then to make sure that, okay, we're not getting into something that's silly. But sometimes, you are going to get into something that, maybe not has great fundamentals, but it's so cheap and momentum's moving. I'm willing to get into that as long as I've, number one, I've looked at it from many different angles as we do. And the second thing is we have stop losses on those portfolios, and we reset those stop losses every quarter. We basically imagine, and I think this is, if I was managing a team of fund managers, or I was advising a lot of people that are managing portfolios, basically every 3 months or so, I'd invite everybody into the room on a Monday morning, and I'd lock them in the room and I'd say, good news. I sold all the stocks you own in your portfolio. You're 100% cash. And then everybody screams and yells, what the hell did you do? And I say, well, sorry about that, but now you're 100% cash. So what do you want to add to your portfolio today? And that takes away the sunk cost fallacy and all the different behavioral issues where we hang on to things. And I think the best way to think about that is It's a little bit like a relationship. If you went into a relationship, you knew nothing about the person. She's beautiful, he's handsome, whatever. And then you had a beautiful romantic time. And after a year, you realize this person isn't what I thought they were. You know a lot more. Now, the question that I would ask is, if that person walked up to you today and you weren't together and you know what you know now, would you start this relationship? And oftentimes, I'm not good at relationships because I've never been married yet. So I always say, be careful listening to advice from me, but I use my mind and my logic and reason to basically say, if you want advice from me, I'm just going to ask you one question, and it's only a yes or no answer. And that's all that I can give you. And so I ask people that often. And I say, if knowing what you know now about the person that you're with, would you start a relationship? And if they say yes, then I say, double down. Bring that commitment into that relationship. And if they say no, I'd say, I can't tell you what to do, but you've just told me something very valuable.
That's a good way of putting it. Hey, it's something I wouldn't mind just touching on at the moment, because there's some pretty interesting activity happening, and from I've been around a little while now, and earned some of the grey hairs that I've got, and would certainly indicate to me in a number of different financial instruments, and also property for that matter, and in a lot of the developed world, we're sort of coming into a potential bubble phase, and we're seeing some, I've seen similar stuff in, it's just wearing different clothes now. There's been all the furor over the whole exercise with the Wall Street, having a mental blank now, but the whole Reddit exercise over GameStop and all the rest of it. And there seems to be this sort of emerging gap between any sort of fundamental exercise and just herd-driven FOMO and almost some of the values seem to be driven more on how good the story is rather than anything else. What's your view around all of that?
I do. I think first thing is that it's hard to predict the stock market. And after years of being in the financial industry, I know that most financial professionals, the ones that are right are almost always right because of luck. And it appears in a vision as brilliance, but most of the cases it's just luck. But so the point is that it's very hard to predict the future, so it's better to understand the past. And so the first thing that I do is I do a system, and I do this I have a Facebook group for my course, which is the Build Your Wealth course, and that's really simple ETF. It's not picking stocks; that's a different thing. But basically, what I do is I created a red light, green light system where I look at, let's say, the U.S. market, and I go back over the last 30 years, and then I apply some different FVMR measures to say 10% of the time the market is really high, and I'll call that red light, and 10% of the time the market's really low, and I'll call that green light. And then I would say that, I'll just use that as a guide. And so whenever I see that red light going, which we've had over the last couple of years, basically, I know that we are close to a very expensive market. And so if I look at PEs, price to book, price to earnings ratios, these types of things, the markets are, somewhat expensive. Now, I would also argue that it's a small number of large cap stocks that are expensive, and it's a small number of companies in the U.S. in particular that are expensive. And so that's where I think that if I look at allocating, if someone came to me and says, look, I got $100 million right now, and I want to allocate it across the world into the stock market, don't worry, I have my other safe holdings. So this $100 million needs to be allocated to the stock market. I would say basically it's probably Asia and emerging markets where I would allocate most of that, because these markets are not expensive. There's a lot of inherent growth. They're not facing huge potential devaluations because of overspending like we've got in the U.S. So that's how I would think about it. Great approach.
Good lead in now, I think, to talk about a subject that's a favourite of yours, which is around some of the mistakes that we make. And I know that you've done some really good research as a result of your awesome podcast to look at the biggest mistakes that investors make. Can you give us a rundown on your findings and what they are?
Are you ready for it? Let's do it. And I'll have a little fun, just like I open up the show. Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. Now, here, after 350 episodes, I've analyzed all of the episodes to try to break them down into the most common mistakes. And I'm just going to go through them right now. The number 1 out of 6 most common mistake is failed to do their own research. Number 2, failed to properly assess and manage risk. The third most common is driven by emotion or flawed thinking. The fourth is misplaced trust. The fifth is failed to monitor their investment. And the sixth is a catch-all account invested in a startup company. Those are the 6 most common mistakes of my guests.
Mate, beautifully said in those dulcet DJ tones. Can I get you now to break those down and put some flesh around those bones, because there's a lot of learnings in that. And then once we've gone through that, to flip the other side to look at, okay, what are the best strategies to overcome those 6 common mistakes?
So I do a little presentation based upon what I learned, 6 ways to lose your money and 6 strategies to win. So let's just go through it for a moment and combine both of what you just talked about. It's amazing. The mistake number 1 is about research. It's amazing how people just put their money into things without doing any real research. Happens all the time. They hear it from a friend or this or that. Next thing you know, they're handing over serious amounts of money for something they didn't really do any research on. So to solve this problem, I challenge you, for the next time that you're looking at an investment, get out a blank piece of paper and do a little research. Write down some notes. What do you think this is going to return? Why do you like this idea? Write down your ideas about it. Now, what I would highlight in this case is write down your positive ideas. What's the potential here? You know, we're talking about huge potential, small potential. Write down your positive ideas. Now, that brings us into number 2, which is failed to properly assess and manage risk. And basically, I talk about assess risk means before you get into it, and manage risk means once you're in it. Yeah. And so what I recommend is that you separate the research that you've done on return from the research you're doing on risk. So you want to rank the risks by probability and severity, and then try to create a risk reduction plan. And I'll just tell you a quick story about it. In my own coffee business, my business partner, Dale, came up with an opportunity to expand into Vietnam. And so what we decided, he would do the research on that and present it one day. And so he did a couple of months of research, and then he presented what potential upside there was for us doing this investment. And then we went out for dinner, and then, you know, after he presented that and we talked some more, it was a great presentation. And what we had then agreed is a week later we would have a meeting to talk about the risks. And then we talked about all the things that could go wrong. And then by the end of that meeting, we decided not to make the investment. But the point is, when you separate your research on risk from return, it allows you to, you know, it doesn't, I didn't spend my time trying to shoot down everything that he was talking about. Let's build that vision. And then it allowed him to then engage in the next week's meeting about all the risks without really threatening his positive model. So this would be my advice.
That's a great way of doing it, separating the two so each has their equal hearing, but not clouding each other and then turning into a battle rather than a constructive conversation. That's all.
Exactly. So then we come to number 3, which is driven by emotion or flawed thinking. And what I say to handle this is find, explore, and list out opposing views. And then discuss this with a knowledgeable and objective person. I don't see any other way to do it. You've got to kind of map it out, and then you've got to talk to somebody. Now, maybe you don't write it all out. You just get someone that you respect who is objective, and then talk to them. And that's how you can try to overcome that. Now, the next one is misplaced trust. And basically, what I've learned is nowadays we have all these books talk about hackathon, and hacking, hacking your fitness and your nutrition and all that. But what I can tell you is that from my experience, trust is one thing that cannot be hacked. It can only develop over time. And it's amazing the number of people that I've interviewed who just give their money to someone they never even met. Just like that. And many people are very, very skilled at getting that money out of the pockets of those people. But the point is that trust builds over time. And I remember asking a fund manager, I believe it was at Aberdeen Funds, a very successful fund management company. And basically I said to him, they were known for their corporate governance. I said, if a CEO of a company did something that was bad for corporate governance, that seemed to disadvantage minority shareholders, how long would you wait? You kind of put him on a blacklist, but how long would you keep him on that blacklist? And he said, a lifetime. Yeah. And it made me really realize that, damaging trust just once can last a lifetime. So think about trust. It develops over time, and it's also very rare. I always ask people, and I'd ask the listener to answer this question, how many people in your life, if you had to tell a real serious secret that the world would like to know, but you need to tell one person and you do not want them to tell anybody else, how many people would you trust with that secret?
If you asked me that question, Andrew, I'd probably say in realistically, there'd probably be only about 3 people I could trust. That'd be my wife. There's a couple of others that I had proven to me that they can keep a secret. But beyond that, I would struggle.
And I would say the average of what the answers that I get is probably about, 2.
Right.
And I use that as proof that trust is rare.
Yeah.
That's proof.
Well, I often say that in our business, we're actually in the trust business because for people to, we assist people in the property sphere in Australia because property as an asset in Australia is much more advantaged than is in most other parts of the world. So it is certainly an important part of anyone's investment portfolio in this country. But to get someone to feel comfortable to invest large amounts of money with you, it all revolves around trust. And I agree with you, trust isn't something that is immediately given. It has to be earned, and it has to be earned repeatedly over time. And it's because we're in such an impatient, instant, everything now world, I actually think the world's suffering from a bit of a trust vortex, or it certainly is here in Australia anyway, where no one trusts anyone as a result of what the media has done to assassinate politicians and churches and you name it. So trust is a very rare commodity, and if you're able to demonstrate trust, then that in itself puts your head and shoulders above a lot of others. What's your feelings on all of that?
Definitely. I mean, I think it's a real challenge, and the question really is that are you a trustworthy person? If other people were asking, if I asked that question to people around you, would they choose you as the person that they trust? And, I can't control media and I can't control all the things that are out there. And I agree that it's a mess as far as trust is concerned. But the ultimate thing I can control is I can become a trustworthy person. So that's the challenge. So number 5 is failed to monitor their investment. And what I would say is that I would like to use an example of, imagine a friend came to you and said, I've got this idea of this amazing Thai restaurant, or whatever that is that they want to start. And then basically they ask for you to invest. And you decide, I want to put $10,000 in this and see how it goes. What I would suggest to you is that you talk to your friend and say, look, what's the deadest day of the week? Well, maybe Monday. Let's say he takes Monday off. Say, the second Monday of every month, I want to have a 1-hour call with you to talk about the business and set what I call a regular predetermined monitoring process. And then, nobody's going to refuse that when they're asking for money. And then hold them to it and then get updates on what you've got. So I think that's my way of handling, the idea of monitoring the investment. And the final one is the startup. And I just basically say the reality, you've got to start from the reality that you're likely to lose everything. And it's a binary investment. It's either, big win or big loss. And those are my strategies, 6 ways to lose money and 6 strategies to win.
Love it. Beautifully summed up. And that folds beautifully into it. And I'm not going to be able to do it anywhere near as well as you do. But Andrew, what has been your worst investment ever? And since no one goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it and then tell us your story.
Oh, beautiful. That's beautiful. So I have a friend of mine. He's a very, very, brilliant guy, and literally a genius. And he's a genius in languages, and he had some idea of software and developing language software, and I was very excited about it, and I wanted to support him. And basically, we started a business together, and this was probably about 10 years ago. And basically, we had great ideas, and over time, it just took more money, and I was the one that was really providing all the capital. And then it started to get sidetracked, and then it started to become a bigger business. And then all of a sudden we were going to create a learning platform, and that was going to compete globally. And then we hired another guy that became a third person in the mix of this, who was also a very brilliant guy who worked very hard on that. And then eventually what happened was we just couldn't, we pivoted too many times, and we pivoted too far away from the original idea. And there just came a point where I said, look, we have to hit some revenue targets. And if we don't, it's over. And we couldn't hit those revenue targets, and we just had to basically shut the idea down. And it was painful. It took everything in me to maintain relationships with the people involved, because I didn't want to lose those relationships. But it was at a time that it was really a large amount of money, and it was a very painful loss. I was head of, CFA Society and successful analyst, and here I am making these mistakes and losing serious money that could really damage my life, and my other investments. And yeah, it was a lot of shame, a lot of embarrassment, and I didn't want to talk about it at the time. And so part of my worst investment ever, when I interview people, part of it I realize is the catharsis, idea of, letting go of these mistakes and learning from them. And that was one that was really hard for me to admit, to accept, and to reveal.
Yeah, and I guess you touched on relationships earlier. The relationships can be really good, or conversely, they can cloud your judgment to overlook the things that are probably staring you in the face. But because of that relationship connection, you're less likely to take action earlier. Am I reading that right? Or
yeah, I think that I also I got excited. He's got a great idea. We were pursuing it, but I realized, as I say, when you think about business and investing, you want to think about, first thing is trust. Do you trust the person? Well, I knew him for a while, and I knew his brilliance. I trusted him. He never did anything that betrayed that trust, and he never did throughout the whole time. The second question is the idea. Is the idea good? If you trust him, but the idea is bad, no point. But I think his original idea was very good. So the next question is execution. So you trust him, the idea is good. The next question is, can he execute? And then the fourth question is capital. You don't ever want to be the only person providing capital to a situation, if you can avoid it. And so trust, idea, execution, capital. And I think it was at the execution part, and I didn't really think about that until after. But once I started to see the reality that we were going to have to execute on a global scale, we're going to raise $3 to $5 million, that capital, to get there. It just, all of a sudden I realized, okay, this is the big leagues, and we're not ready for that. And I can't, fund the process of getting ready for that.
That would have been a tough conversation, saying we're going to turn off the tap. That would have been very, very challenging, I would imagine.
Yeah. And I have a policy, which is, and this is Dale and I talked about when we set up Coffee Works many years ago, is that if the business or the money ever got in the way of our relationship, we're going to shut it down. Not the relationship, we're going to shut down the business. So I really have a philosophy that, money is just money. It's neutral. It's a neutral thing. And it's something that I could be stripped of completely and still be a perfectly whole, happy human being. Of course, there's comforts and other things that I wouldn't have, but that's my mentality because of what I've told you about my history.
Yeah, and this is where it's the old obstacle is the way exercise. The challenges you've had have really set the tone and given you the comfort and the confidence that regardless of what happens in the world, you're still okay. It doesn't matter. And what goes with that is courage, but also that fearless approach and an ability to look at situations on their merits rather than be clouded by other things. So were there any other lessons that you learned from that experience that you want to share, Andrew?
I think the first lesson is, you got to look you got to look down the road. It's more than just getting excited about the moment and the idea. And I'd say that the lesson I learned was this lesson of trust, idea, execution, and capital. That was the big lesson out of that.
Yeah, well said. And I'm going to use your questions again because I think they're very good ones. Based on what you've learned and what you continue to learn around that area, what one action would you recommend our listeners take?
So now I do advise startups, and I do help companies that are ongoing to clean up their financial aspect of their business in a lot of cases. But I would give advice to anybody that invests in a business and my advice is just very simple. Get a monthly financial statements, balance sheet, income statement, cash flow. That is the only advice that I think it's the most valuable advice, because majority of people could never get it, and therefore you don't have a business. And if you can get it, you're going to have a mirror that's going to give you a reflection of the outcome of your management decisions and ideas. And if that reflection is a very negative reflection, the management of that company and the owners and shareholders are going to either take a very clear, focused look and reverse that, or they're going to have to get out. And I think that that's where I always say, when I walk into my course of finance course, like valuation or that type of thing, it's a lot of young people that are excited to work in the industry of finance, and I always start off with the same statement, which is finance adds no value. And it's a little bit annoying and shocking. But what I say is that finance is just a mirror. Our job as financial professionals is to provide a mirror to the management team, because what truly adds value is products and services that customers love. That's what adds value, and that can only be created by a management team, by a leader, and coordination amongst the management team, and executing their ideas, and then checking those ideas against what's happening in the financials. Now, also what I would say is that the objective of management is to create value, and not to create profit. So a lot of times we think about it. Now, I'm saying get your financial statement so you can see if you're making profit. Sometimes it's about survival, but the point that I'm making is that Amazon didn't make profit for 10 years. So were they destroying value? Actually, they were creating value. So, profit is one thing, but value is the whole picture of how you manage a company. And if you create a company that's based upon lying, cheating, stealing, destroying the environment, or all those things come together to create the value of that company. And I think that that's where a lot of people miss about the beauty of the stock market and the beauty of capitalism, is that it is not about maximizing profit. It is about maximizing value. And the market, if the markets are allowed to work, people are critical of companies that are maximizing profits at times, knowing that, okay, great, there's going to be a lawsuit for $50 billion or whatever down the road, and that's going to destroy value. And so I think if we can get back to the idea of focusing on value, then I think we have a better check and balance.
Yeah, very good commentary. And that value exercise is something a lot of people miss, unfortunately, and that's something that you get a lot of, mate. And if I look at your life to date, the thing that I can see emanating from everything you do is that you invest in creating value. And I love the way you continue to do that. And I've been fortunate enough now to rub shoulders with you, and pretty keen to continue to do that on your journey. Mate, it's something I just wanted to challenge our listeners with, because something you so brilliantly did during our conversation on my worst investment ever was to coin and capture the TLC challenge, and which I just really resounded with me, where you said, think of the person that you love and care for the most, and then while you're thinking of them, treat yourself better than you treat them. Something I want to extend on that today, because I think we're on the...
And I think you haven't referred to it correctly. It is, in fact, the Bushy-Martin TLC challenge. You just called it, it's the Bushy Martin TLC challenge, and it is. Think about that person you love the most, and then love yourself just a little bit more.
Yeah, you coined that absolutely beautifully. I want to extend that a little bit because you know and I know that if individuals, families, communities and governments were serious about really eliminating poverty in the world, if each of us just put away $20 a week, every week, for years on end, and I'm going to challenge the listeners today. If you've got a son or a daughter, it doesn't matter what age, you start putting $20 a week into, and let's take a Vanguard index fund, Andrew, because they're easy to do, and you keep on doing that. Then by the time they're 20, they'll have enough for a house deposit. But if you don't spend it and you keep putting that $20 in, by the time they're 50, they'll have a $1.3 million in their back pocket. And if they hang on until they're 60, they'll have $3.3 million in their pocket. Now, if we're looking at solving poverty and also the myriad of financial challenges that communities have across the world, just that very simple act of putting $20 per week away for every individual would transform the world in 30 or 40 years. So I'm going to challenge the listeners to do that for themselves, do it for your family, and let's start encouraging governments to think the same way, because if we do, the broader TLC challenge, beyond giving yourself tender loving care, is to use time, leverage and compounding returns to really change the face of the globe. What's your thoughts on that?
Amen. I mean, I think that, if we think about I can bring it back to my experience, and that was education is what got me out of the situation of not having, money and all that. So if we were to say that we wanted to solve that, we wanted to give young people a guarantee that they would have an opportunity to get their education, have funding for that. It doesn't take a lot when a child is born, and you could even say, let's focus on families that have not yet gotten a higher education. And then we say, how do we fund that from the beginning through government or through voluntary organizations to say, if we fund that correctly now, when that child is born, that child and that family can grow up knowing that they will have the funding available to get their education. And even if that's all we did, forget about retirement or buying a house or anything, that would be magical.
Would be transformational. You sort of ignited a bit of fire in me around that, Andrew, and I've been sort of contemplating it for a while. I'm certainly going to be putting a lot of energy into the TLC challenge at a number of levels. So I thank you for your inspiration in that regard, mate. Mate, I wanted now to jump into what I call the ambush series, which is just the 5 quick questions and then a closing question, which I ask all of our esteemed guests here on Get Invested.
I'm ready.
Yeah, excellent. So the first of those, what's your favourite quote and why?
So my favourite quote, I actually got it right here, and it comes from the book As a Man Thinketh by James Allen. The book came out in the early 1900s, and it says, this is the quote. It's a little bit long, so just bear with me. Having conceived of his purpose, a man should mentally mark out a straight pathway to its achievement, looking neither to the right nor the left. Doubts and fears should be rigorously excluded. They are disintegrating elements which break up the straight line of effort, rendering it crooked, ineffectual, useless. Thoughts of doubt and fear never accomplish anything and never can. They always lead to failure.
Beautiful. Beautiful. Very well compassed. It's pretty self-evident, but why is that your favourite quote?
I think that it's easy to get distracted. It's easy to get scared. It's easy to get doubt. And this helped me to feel comfortable to push those things aside. And I think that I needed that at times. I read that book, that book that I have right there, my grandfather gave to my father, and he gave it in 1954. And he's got it signed in there. So it's something that touches my family, but it also is something that I read a lot when I was younger, when I was full of doubts and fears. So repeating that quote over and over again, I even put it up on my wall when I was younger. Now I've internalized it.
Wow. Absolutely love it. And you're a rabid reader like myself, Andrew. What's the top book you'd recommend listeners have a read of, and why?
Well, I would say, you mentioned the Road Less Traveled. And, I would say that forms the foundation of a lot of my thinking. So it's 30 years old now, or maybe even older. But I do believe that there's a lot of great wisdom in that. So The Road Less Traveled by Scott Peck. And delaying gratification, and also his description of love, like what is love? And, I think that that really resonated with me, that, it's something very different from what, we typically think.
I 100%. That's been a foundational book for me. I read that when I had my, what I call my car crash in my early 30s, and it really transformed my thinking, and the concept of sacrificial love in giving without expecting anything in return has really been something that's shaped everything I've done since.
Yep.
And the relationship that I now enjoy with my awesome wife is greatly due to the fundamentals that came out of that book. And as you say, it's influenced other aspects as well. So it's it might be 30 years old, but wisdom is timeless. And I would agree with you. Listeners, grab yourself a copy. It's regardless of where you're at in life and what you're doing, you'll get a lot of reading out of that book. Awesome. This one's a little bit left field, but because it's probably got an Australian context, but because a lot of Aussies believe they pay way too much tax. What's the top legal thing that you've done to minimise the tax that you pay, Andrew?
Well, I think ultimately owning business is an important part of managing taxes, because it allows you to put expenses related to the business in there and then manage your compensation relative to that. So I would say that's probably, one big aspect of it that I would say is probably the biggest way that I manage that.
Yeah, very well said. Back on the investment topics then for a minute, what's both the worst and the best piece of investment advice that you've ever received?
I think maybe I could say the best one came from my dad, who said, if you just keep jumping around from one thing to another, you're never going to be able to amount to something significant. And so I think that, that really comes down to the idea of hyper-focus or focus, to focus in on one area and build some strength and competency there. That's the only way I know how to increase, my value. And, I hear a lot of bad investment advice. There's so much bad investment advice out there. And, I think that one of the pieces of investment advice that is going to be a little bit strange, but a lot of people give the advice, like, think about the book, Rich Dad, Poor Dad. Ultimately, the rich dad was an entrepreneur. The poor dad had a job. And basically, but what we know in real life is that only a tiny fraction of people really have the skills to be an entrepreneur. Maybe less than 1% of the people. And there's a lot of skills involved. So if that's the case, this book actually gives very, very bad advice, because it's telling all the readers to try to be that 1%. And so I would say that, that the opposite side of that advice is that, yeah, if you think you're going to be an entrepreneur, go do it. Enjoy. And that book's very, lot of great stuff in it. But that advice of, it's not the only way to create value. Keeping that gap, you can create value through your job. And I think my mom is a good example of that, because when my father passed away, it was a one family, earner family. My dad, wasn't making huge money. He's just a corporate executive all of his life. But when my mother retired, and after 22 years of retirement, my father passed away, my mother came to Thailand. And basically, she's her financial situation is such that she doesn't have to worry about money for the rest of her life. And the point first of all, there's the power of compounding. They made some good, smart decisions. But ultimately, it's evidence that you do not have to become an entrepreneur to create value. And so I challenge everybody to keep your monthly costs deeply below your monthly income to create value.
Yeah, great advice, and 100% right. This fallacy that you have to start a business to get anywhere, I totally agree with you. If you're in a well-paying job and providing your lifestyle inflation doesn't escalate to meet the income you're earning, but you, as you say, get proud of living lean, then the gap between what you spend and what you earn, if that's invested wisely, can really set yourself up. And it is a message that's often missed. So very good advice there, mate. Coming to the personal level for a minute, what's a personal habit that you believe contributes most to your investment success?
I guess I'm a methodical person. And so I go through a process before I do something. And it works for me. It slows me down. It allows me to ask questions. And it allows me to look at things from many different angles. So I'd say that that's probably, my biggest strength.
Yep, fine. Final question then, and this is a big question, but it gives you plenty of scope to sort of wrap everything together in a nice, neat package based on the breadth of topics we've discussed today. If I gave you a microphone that spoke to every single one of the 7.7 billion people that's currently alive in the world today, mate, and I gave you 60 seconds to speak, what would you say?
I think the first thing is your objective in life is to be more of who you are. You don't have to be what other people say. The second thing I'd say on that 60 seconds is fear and doubt are really destructive elements. You've got to try to block them. And the third thing I would say is protect your mind. It is the ultimate source of everything that we can do. If you lose control of your mind, you can't control your body and your actions and everything else. And so protect your mind from all the people and things that are bombarding it and build the strength of mind.
Yeah, great way to bring it to a close, mate. Really enjoy your company. I get a lot of energy from your insights, and just your creative ability to add value at all levels is very motivational and very inspiring, Andrew. So I'm going to encourage all the listeners to jump on board and start listening to My Worst Investment Ever. It's a great podcast. You talk to some awesome guests. How else can the listeners engage with you and take advantage of the wealth of wisdom that you share through your various means, Andrew?
So there's two main ways. The first one is just go to myworstinvestmentever.com and listen in. And also there's a contact menu item. And if you go to that and you write me a message, it will come directly to my personal email. The second way is I'm on LinkedIn. And so feel free to reach out on LinkedIn and I'd be happy to talk.
Yeah, fantastic, mate. Really enjoyed the chat. I'm very keen to continue the dialogue, Andrew. There are a select few people that I like to get back on and get invested whenever I can. And if you're open to it, would like to bring you back on to perhaps deep dive into some specific subjects that we can move forward. But in the meantime, keep enjoying Thailand. My wife and I will be getting over there at some stage again because we just love the place.
Then we're going to have lunch with Mom.
Yes, I'd love to. And make sure you give your mother a massive hug from me, mate. You can turn my TLC challenge onto your mum, please.
Amen. And, Amen. Well, she's going to listen to this and she's going to appreciate it. And I just want to say thank you to, the time that we had together on my podcast and this time. I think there's a lot of stuff that we're both sharing that can bring value. And I hope that the listeners gain value from it. So thank you.
Yeah, thanks, Andrew. Looking forward to catching up. Stay cool. Thank you.
Well, freedom fighters, how good was that? You get a summary of all this investment gold in the show notes. Just email me on hello@khgroup.com.au. It's HELLO@khgroup.com.au. Or check us out at www.bushymartin.com.au/get invested. I look forward to joining you next week for another episode of the Get Invested podcast. So thanks for listening. And as always, dream as if you'll live forever and live as if you'll die